Good morning, traders and investors. This is Roger Scott, Senior Strategist from Wealth Press. Today's Thursday. It's March 2nd. I realized I didn't set my watch. It says it's the 30th of February. It's the funniest thing. Anyway, it's 7:45 in the morning. The market's going to gear up to open up in about an hour and, an hour and 45 minutes to be specific with you. The Dow's up about 59 points. The Nasdaq is down 70 points. We are mixed. Now, as I told you yesterday, one of the reasons the market rallied yesterday is we had a nice little move in energy prices. And it also appears that the non-tech sectors are actually moving up, whereas the tech sectors are just not doing anything. Also, earnings. Let's talk a little bit about earnings. Today, you've got Broadcom reporting. You've got Budweiser reporting. You've got Best Buy's reporting. And here you could see all the expectations, the EPS expectations. Big Lots reporting. AI's reporting. Costco's reporting. Dell is reporting. HPE is reporting. Hormel is reporting. Kroger's reporting. Macy's is reporting. I mean, a lot of retail. Now, retail, if retail reports good numbers, then they do really, really well. But what I'm not seeing is anything special or any major rally from them at all whatsoever. As a matter of fact, most of them are subdued. I was hoping we'd get some upside from Target, but not so much. But it'll be very interesting to see what their forward-looking statements are. Very, very interesting indeed. Now, I fully expect the energy sector to start coming back up, and I fully expect communication technology and consumer discretionary to become best friends again, and I think they're going to cool off a little bit more. I'm just not seeing any catalyst, especially after earnings season are over. I don't know if you guys know this or not, but typically tech and consumer stocks, they really rally during earnings season if there's something good, but if there's not, there's just not much of a rally. Matter of fact, that end-of-year rally you guys are used to seeing, that's usually caused by the last batch of earnings that you're seeing right now, not this earnings quarter, but the end of the year earnings quarter. That's what really causes that Christmas rally. It's these stocks right here. We're not seeing it. It's nowhere to be found. So big red flag there. Now, in terms of Fed data, you've got jobless claims today. You've got productivity costs and natural gas. Now, the Wall Street experts will tell you the jobless claims is a big number, but it has been the most consistent and the most stable number we've seen in quite some time, which is one of the things that gives the Fed the green light to continue doing their monkey business or shenanigans and saying, hey, if the jobless claims are not going higher and people are working, we can keep raising rates. Also, I don't know if you guys noticed or not, but in the last couple of days, there's been a lot more talk from the Fed about going up above 5.4%, maybe going to 5.8, 5.9, maybe 6. Remember I told you they're going to go to at least 5.2, 5.4, and in order for us to get down to 2% growth, we're going to have to go higher. That's a problem, and that's a problem that a lot of traders and investors were not thinking. So that's a major issue. Let's talk a little bit about global economy, and then we'll look at the indices. U.S. benchmark indices finished regular session mixed after another U.S. economic data. Hawkish comments from the Fed officials reinforced expectations that the Federal Reserve will keep raising rates to combat inflationary pressure. So I'm just not seeing that light at the end of the tunnel. Nasdaq, S&P indexes retreated at the 10-year Treasury yield, topped 4% for the first time since November. Look at that. See that? That's not happiness right there. And by the way, I'll go back. I just kind of really quickly want to show you something. Algos, hello. Remember I said we may bottom here or we may go a little lower and then start heading higher? Right there. Those darn algos, they get you every time. What do I always tell you? In the old days, the highs would be perfectly even right here or even right there. That would look like a reversal right there. In the old days, this would be the reversal. Now, they take us down, they mess around, they stop our stop losses out that are at the support level or the resistance level, and then they take the market higher, which they did right here. So I think most of the negative economic news is already priced into the market. As you will see, things are negative and the markets are kind of pricing it in right now. Now, following fresh economic data and remarks from the Fed, energy, material sector gained ground on higher commodity prices after Chinese manufacturing expanded at the fastest pace in over a decade in February. And what do I always tell you guys? I always tell you something really important. You've got to keep your eye. You've got to keep your eye on the data because if the economic data is getting worse, or if Chinese economic data is getting worse, it's going to impact the U.S. economy. So data on Wednesday showed that the February ISM manufacturing PMI rose to 47.7 from 47.4 in January, but remained in contraction territory for a fourth straight month. Not good. Now, here's where things get interesting. The Fed is talking. Kashkari said in remarks yesterday that inflation is very high. He's open-minded to either 25 or 50-point base hike. You see that? They're changing their tune. They're changing their song and dance. Atlanta Fed President Bostic said Fed needs to keep interest rates 5 to 5.2 and hold it until we'll wear into 2024. The problem is 0.25 may not be enough. We may have to go to close to 6. I'm not kidding. I'm serious. And that's not priced into the market right now. Now, here's where things get really hairy. About a week ago, 0.25 was priced in at about 90%. I think 85, 90, don't quote me, but I think it was near 80 to 90%. Now it's already at 69%, and there's a 30% chance in terms of the implied price of the bond market of 50-point base hike. So the fact that the market is pricing that in is kind of getting a little scary. Also, if this number starts getting towards 50, it'll be very, very hard to get a rally out of this market, even a sustainable rally. On the earnings front, oh boy, we've got some goodies coming out today. Broadcom, Costco, Kroger, Dell, they're all scheduled to report. Now, these are major companies, and they can have a major volatility on the market, so we got to be very, very careful. We also have jobless claims, not a real concern for me, not really focused on it too much. I think the number's going to be just fine. It doesn't seem to be off that much. Eurozone CPI has been reported at 8.5% year over year, down from 8.6%, but was above expectations of 8.2% for the year. China composite closed lower as two-day rally faded, with worries about rising inflation and interest rates keeping the mood downbeat. So the global economy is not loving the market right now, and they're all looking for U.S. market for tips and tricks. Nikkei, Japan, stock closed slightly lower, even after data showed capital spending rose more than expected to 7.7%. It's all in black and white. Now, pre-market, Salesforce is up 15%. That can give chips a nice little boost. Snowflake is down 6%. That'll give tech a nasty boost. Okta is up. That's good. Neo's down 1%. This Funko, I don't even know what this Funko is, to be honest with you. But look at what's on the table today. Broadcom, Costco's coming out today. That's huge. That's really, really huge for consumer discretionary. So we may get a rally today in some stocks. Kroger's reporting today. Dell is reporting today. Hormel is reporting today. Best Buy is reporting today. Zscaler is reporting today. These are major, major companies that we need to pay attention to. So we have a lot of unforeseeability. Interestingly, I want to show you something interestingly. The semiconductors are actually reacting a lot better than technology overall. Look at this. This is technology. Notice how technology is closer to the 200-day line, and it looks like it's giving up the ghost. Matter of fact, today's price is already took out the low right here. But if you look at SMH, you will actually see that SMH is holding up. That's a very, very positive sign, especially in light of the fact. Now, I know it's down for the day, but let's see how much it's down compared to QQQ. Yeah, more than QQQ. But look at QQQ. QQQ has given up the ghost, and it's now trading below the 200-day line, and it looks like it's in the middle of that range. And as I mentioned, the Dow, oh boy, shakeout. We had what you call a full-on shakeout. I'm really shaking right now, you could see. But that is a shakeout right there. If that's not an algo shakeout, I honestly don't know what is. Now, as I mentioned before, there are some sectors that I'm really liking right now. As a matter of fact, let me just kind of show you where I'm at right now. I like industrial. Even though it's choppy, I like it. I like the fact that basic materials is moving higher. I like the fact that financial is making higher highs. Communication service sucks, and it looks like it just wants to drop lower. As a matter of fact, I want to show you this chart, XLC. Let me show you something here, if you want to get technical about it. That's a descending triangle. It's not a stable triangle. It's a descending triangle where the highs and the lows are getting lower. That's not a real positive move. That's not a positive pattern, and that's not a bullish pattern. That's a bearish pattern. So I'm seeing more downside here. Let's look more at these indices. So yeah, communication services isn't looking all that pretty. Consumer staples looks like it bottomed out, actually. It doesn't look like it has got that much more to go. Energy I like, and I like how it's consolidating. Technology I don't like right now, although semiconductors look a little better. Real estate doesn't look all that great either. Healthcare looks like it's bottomed out. Consumer staples and healthcare both look like they bottomed out. And utilities look like it's bottomed out. So we may get some upside. As a matter of fact, I'll tell you what I'm thinking. What I'm thinking is we may get some downside in consumer discretionary, technology, and communication sector, and we may get some upside in healthcare. We may get some upside in utilities. We may get some upside in energies. We may get some upside in industrial, and we may get some upside in basic material stocks, and financial looks very choppy. But I would be very, 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 very cautious with communications, with technology, and with consumer discretionary right now. I would be really, really, really cautious. Like, I would be as cautious can be. Now, today, I want to give you the ETF. Today's Thursday. I give you my top ETF and my option pick. I am going to stick with the energy sector. That's right. I'm going to stick with the energy sector. Now, I'll give you two. How about that? I'll be fair. I'll give you the strongest one, and I'll give you energies. So let's see here. All right. So the strongest one is industrial, and let's look at industrial here. I actually like industrial right now. Yeah, industrial looks nice and choppy. See, you get a lot of defense here. So it may not rally, but there's a good side. It'll just stay choppy like the Dow. Or as the Dow, I believe, will come up right now, so will industrial. Let me give you some options here. So this is January, February, March, April expiration. They expire in 51 days. This is the 101 strike price right here. There you go. It'll get nice and liquid once the market opens. There's a wide spread right now, but you could see volume and open interest are huge. So just go with the 102. Go 102, and if it goes down, go with the 101. But 102 strike price that expires in January, February, March, April is a good bet. That is the bet I would go with. Now, if you want to speculate a little more, I do like the energy sector right now. And I would look at the exact same thing. And as you can see right here, if we look at this, I would go with I'd probably go with the 86 right here. 86 strike price right there. Nice, tight, no problem spread. You get spread. It'll be like a 5-cent spread. 86 strike price. And you've got plenty of days to go. Now, here's the kicker. If it doesn't move your way within 10 days, just get out of the trade. We never give our trades more than 10 business days. 10 days is all you want to do. If it doesn't give you any success, any love by that time, just get out. And that way, this option it'll still have over 30 days. The goal is to get out of an option while it still has more than 30 days to go. Now, before I let you go, for the first time this year, my number one buy signal flashed on my number one breakout stock. And it's in that one of the sectors that I just talked about. It doesn't happen often. The window of opportunity to open a position is rapidly closing. But there's still time. Now, I just held a special presentation where I revealed my number one breakout stock, and I walked everyone through my number one buy signal showing exactly how it works. Follow the link below. You don't want to miss out. It's really cool. You will enjoy it. You will love it. I can't wait for you to see it. Follow the link below. Check it out right now. And again, if you don't know where to find it in the YouTube Wealth Press channel. The link is below the video. Also, there's a link for a Telegram subscription. We gave 3 bonus seasonality trades that have a win rate of over 80% in the last 10 years on our Telegram channel. If you haven't subscribed to our Telegram channel, you're not going to get the freebies. And those freebies are premium trades. Subscribe to Telegram. It's Roger Scott Telegram channel. You will love it. There's no spam there. There's no weird stuff. It's just all content. And you get alerts immediately. Subscribe to it now, and I'll see you guys on the other side. Have a great day. I want to hear from you. I want to know if you guys are making money. I want to know if I'm helping you. Support@marketgeeks.com. Bye. Have a great day.